Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The dollar index surged back to the 95 mark, and you're seeing pressure on the euro, sending it back towards major three-star resistance at 116. For the dollar index, this is it's retesting the highest level since July. What this is going to mean, though, it's going to put pressure on commodities because the dollar is stronger. However, you're not really going to see it in the dollar index relationship because that's 57% the euro. Really what's driving markets right now is the dollar-yuan relationship. China continues to devalue the yuan, and now the dollar against the yuan is at the highest level since December. You look at gold. Gold's at the lowest level since December. That's one of the reasons why gold has not gotten going. So when you're looking at the broader currency market, make sure you see and look at what the yuan is doing, because it's, again, driving markets at the moment. Moving, again, focusing back on the dollar and euro relationship, get support at major three-star support there at 116. Tomorrow you have regional CPI data from Spain and the others, and then we're looking on to final quarter one GDP for the U.S. at 7:30 a.m. Central Time. As well, you got weekly jobless claims. Later in the day, St. Louis Fed President Bullard talks, as well as St. Louis Fed President Bostic. But speaking of those Fed presidents, that was one of the biggest drivers today for the dollar. You had Boston Fed President Rosengren. He took a very hawkish approach. He's been one of those guys that has had 4 hikes this year for the entire year on his dot plot. Ultimately, though, he's talking about staying hawkish regardless of what the trade tensions are. He's looking at being hawkish now and using this ammo while you can, because there's going to be a recession around the corner. And his hawkish tone set the equity market off a bit, as well as continue to support the dollar. Another supporting reason to the dollar outside of Rosengren and the China devaluation was goods trade balance. We saw that number coming better than expected today. And with trade being in all the headlines, this was a big driver to continue to support the dollar. Moving on to the yen has failed yesterday against major three-star resistance. We're seeing continued pressure into today. We've said it before and we'll say it again. We cannot get excited about the yen until it gets out above major three-star resistance, aligning with the 200-day moving average around 92. The door is open to test near 89. There is a trend line just above there from dating back to the end of 2015. Watch for that if you see continued pressure with the yen. Moving on with the Aussie and the Canadian, the two commodity currencies finished lower again today. They've been beaten up, and there really is not much of a light at the end of the tunnel until we see more news on trade or positive news on trade. The Aussie, we like more than the Canadian if you have to be buying something. However, the path of least resistance seems to be lower, and if you're looking at that in the Aussie, around 73 and a quarter is our major three-star support. But we would need to see a washout to get excited about anything. Wash below there, clean out the bids, and potentially at that point we can look to get long. Give us a call. We're here to talk about anything in the currency market. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can also sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.